What's going on, everybody, and welcome back to 5 Minute Finance. Today we're going to be going over Carnival Cruise Line stock, what analysts are saying, should you buy Carnival Cruise Lines now, looking at the charts, and then I'll give you my opinion at the end. If you're new here, be sure to subscribe to the channel for more, and with that, let's jump right into it. So Carnival Cruise Lines has been one of the hardest hit companies thanks to the coronavirus. Before Corona, it was already down, with many channels here on YouTube talking about how it was a buy, which at the time was a fair argument. No one could have predicted 6 months ago how hard this stock would have been hit. At the time, it looked like a buy because it was down, showing promise for future gains, and had a pretty high dividend yield. Now the stock is cruising around $10 per share, and they have cut the dividend completely as they try to stay afloat. No pun intended. First, let's take a look at the chart. So if we look at the 5-year chart here, you see that they've had a kind of rocky 5 years. For the most part, they were pretty sideways with a little run up starting in mid to late 2016. Then from there, they peaked in 2018 at the beginning of the year, and then it's just been a downward spiral since then, before eventually completely crashing thanks to the coronavirus. I believe back a few months ago, before they really crashed, the dividend was somewhere in the 6% yield, and they showed a lot of promise for future gains with all these new markets they were entering, which is why so many people were saying it was a buy. Now that the dividend has been completely cut and there is the potential for them to go completely bankrupt, it's harder to say whether or not it is a buy. Let's go over some arguments for and against Carnival Cruise Lines, and then I'll give you my opinion. First, let's go over the bearish argument, or the argument against Carnival. The media obtaining negative experience commentary regarding cruise incidents could weigh on Carnival's brand image and pricing leverage, making new cruisers hesitant to try cruising. A decrease in new cruisers leads to fewer repeat cruisers. Higher commodity prices, particularly in energy, could affect profitability, especially as firms comply with IMO 2020 guidelines. Although Carnival has benefited from sourcing passengers globally, political turmoil like Brexit and pandemics like COVID-19 may cause cruise cancellations when itineraries change, hurting profits. Now, let's go over some arguments in favor of Carnival. If COVID-19 recedes quickly, yields could recover faster than we currently anticipate. Rapidly declining fuel prices could help benefit the cost structure to a greater degree than initially expected, thanks to Carnival's floating energy prices. The Asian Pacific market should remain promising post-COVID-19, as the 4 largest operators have capacity for nearly 4 million passengers in 2020, which provides an opportunity for long-term growth with a new customer. So personally, I actually own a very small stake in Carnival, which I bought when it was at about $30 per share, so you can imagine I got absolutely hammered. Luckily, it wasn't a lot of money. I think going forward, now is not the time to buy Carnival unless you are comfortable taking on a lot of risk, and if you are, there is of course the potential for huge gains if things turn around and the company gets back up and running. At the same time, because they are not headquartered in the United States, they are not part of the government stimulus package, meaning they get no bailout money. With no cruises running, as far as I know, they have no real income while having to pay massive operating expenses and debt. For me, Carnival Cruise Lines is going to have to be a pass, at least for now. If you're new here, be sure to subscribe to the channel for more and click the link on screen to check out our review of Boeing stock. With that, thanks for watching, and we'll see you all in the next one.